Hello, today is September 8th, 2021, and it's time for some new stock picks. Before I do that, I'd like to take a minute to review the performance of the top picks from this time last year. And we had three stocks, a tech stock, Nova, and VMI, which is up approximately about 110% since this time last year, or since the time that we recorded the video last year. Second one, PetMed Express, down about 4%. And the third one, Expeditors International for Washington, up about 32%. And on average, the three stocks were up about 46% for the year, and that compares with about 33% for the S&P 500. This time around, the top stock picks are going to be Canadian. Last year they were all US, and the reason for that is twofold. The Canadian market is not as fully valued as the US market currently. And secondly, the risk for inflation going forward is higher perhaps than it was this time last year. And the Canadian market, from a global investor point of view, is more correlated with resources and materials and things that go up with inflation. And regardless of what Canadian stock one uses, if you use enough of them, you're going to get correlation with those forces, and because international investors will choose to invest in Canada through index investing or other sort of basket investing, which will include all types of stocks, including banks and utilities and telecoms and everything else. So top pick for now. Hopefully should be good for a year, and actually these companies, all three of them, should be very good, very long-term holds. They could make core positions in one's portfolio if they don't already own them, or if they own them, they could add to them up to a reasonable size. First one is BCE, the telecom giant in Canada. It has generated a return on equity of approximately 19% for the last 5 years, and I don't really see that coming down in the future. They have a good position in the market, unique position, and I think they can maintain their margins and keep their profitability high. And it trades at about 3.2 times book value, and in my opinion it should be closer to 4 times, so the decent upside just to get to a fair value. And again, even if one bought this stock at fair value, you could hold this for a long time and get a very decent return from it. Next one is the Toronto Dominion Bank. Again, a good core long-term holding. Return on equity over the last 5 years around 15%. I think again they can maintain that kind of profitability going forward. And this one is even cheaper. It only trades at about 1.6 times book value, and it could easily trade at as much as 3 times book value, which will make it for a very, very good upside. So it's undervalued, and even if it weren't, just by maintaining their profitability going forward, they should be able to deliver returns in the double-digit range for the foreseeable future. It's a good long-term pick. And the third one is a more cyclical stock, Magna International, the auto parts maker. This is more interesting in that it is cheap, it's profitable, it's strong. The automotive sector has shortage in supply right now. It should continue to do well. And quantitatively speaking, again, historical return on equity of around 20%. Going forward, maybe a little bit lower, but the valuation is quite attractive at only 2 times book value when it should be it's trading at 3 times or higher. So good business, a good price, fits perfectly with our way of picking stocks. So if you have questions about these stocks and want to see if they already fit in your already very well diversified portfolio, please give us a call. Thank you.